CMHC and their crazy bearish prediction about how prices are going to come down 50% in 9 years or so. Good day, Toronto. Welcome to the first 2021 Prime Properties TO podcast. So glad you could join me here today. I kind of took a little break in January, but I was also thinking, in terms of like doing the podcast, but I was also thinking maybe I'll just wait until TREB decides to publish their data for the rest of the year before I kind of do a little bit more of a long form kind of content. So today I got some interesting stuff to tell you guys and what's going on. So we're going to go through CMHC and their crazy bearish prediction about how prices are going to come down 50% in 9 years or so. And then TREB literally I think two hours ago just released their data for all of 2022 last year, right? So now we're going to be able to kind of look at the two of them and kind of give a little comparison of like what's actually happening in the market, right? So kind of in case you missed the posting that came out not last week, I think it was maybe 2 weeks ago, CMHC came out with a report saying that prices are going to drop about 50% by the 2020, right? So right now I'm going to share my screen. So for anyone who's listening onto like the audio format, don't worry, I'll kind of annotate what's going on. But one of the big charts that they came out with was basically saying that by 2020, they're going to see, 2029, we're going to see about 47.9% drop off in terms of price, right? So this is important because it's such a big number that it's grabbing everybody's attention, right? And, you know, as usual media headlines go, you go with the most crazy, drastic one out there. But you have to understand that there are scenarios of what's happening, right? So they lined it up into different types and what they think the recovery is. And let's, call it as it is. Like CMHC is super, super bearish on the market. And we'll look at, what the TREB numbers look like a little bit after in this podcast. But they're only going to say it's minus 47.9% of prices coming down if the government is not going to support the recovery, and it's going to be a W-shaped recovery. So, ever since the pandemic, everyone's been talking about different types of recovery and kind of like how we're going to recover. You got the V, which is like, straight down, straight back up, back to normal. Then you got the U one, which is kind of like it lags at the bottom a little bit, and then it comes back up. And then now we're talking about W. They're thinking that it's going to drop down. It's coming back up. So technically prices are going up right now, still a bit later, and then they're thinking it's going to come back down again and then go back up, right? So this is all what's happening in about 9 years or so, 8 since it's 2021. Yeah. So the only way they're projecting that it's going to be about minus 48% is that if there's no government support. So let's look at what's happening right now. Ever since the pandemic, CERB checks, and now it's turned into EI checks. So there's government support. Then the Canadian government is buying back so much mortgage bonds, and OFSI, I always forget the name, like Office of Financial Institute, whatever, right? Like the guys who did the stress test, they're reducing the amount of capital banks need to lend out money. That's why all the mortgage rates are coming down. Then Bank of Canada is buying back so much mortgage bonds. So it's very obvious that there is government support right now. Now, can it change in the next 9 years? Maybe. Yes. But my question I ask myself that I keep telling everybody is, look, real estate creates so much income and jobs and revenue for the kind of entire, let's call it province, right? And maybe some of the country. So are they going to let real estate prices run up and asset prices go up like crazy so that it can help with the GDP and help us grow? I keep coming back to that question. I don't have an answer, but I keep steering to, yeah, I think so, because the Bank of Canada, Tiff Macklem, basically says, hey, we're going to, run inflation up. We're going to keep interest rates low, right? So that's just a recipe of asset prices going up, right? So this is real estate prices going up, right? The S&P 500, like any kind of like hard asset is going up in price, right? So if you are listening now, I think Tesla just announced they just bought like $1.5 billion of Bitcoin, right? So like everybody's putting their money into something and they just don't have trust into what the fiat currency is, right? Meaning like, our Canadian dollar bills, right? One, the colorful monopoly one, right? So you really have to think, what's the solution out there? There's so much debt. We keep printing money and we have to ask, is the government actually going to not support it? And I think the answer is no. And I do think they're going to let real estate prices run wild. But if we look at all the other kind of scenarios out there, right? The baseline, like the I guess, best case scenario for them is by 2029, they think prices are going to come down 13.7%. So let's think about that. Back in, I think, May 2020 or April 2020, just when the pandemic kind of started, CMHC came out real bullish. And they're like, okay, all right, prices are going to be down 18% by the end of 2020. So prices are not down 18%. And if anything, they're probably up 16% based on the TREB numbers that came out. Again, I'll talk about those a little bit later. So if you kind of ignored CMHC and you continue buying real estate, which some of my clients did, then you're looking at basically you've made money on kind of your investment because prices have gone up, right? You know, just strictly talking about the appreciation side. But if you didn't and you listened to CMHC's very bearish approach, and I don't blame them for it, like I think it's actually very smart because they're trying to protect our consumers, but when you come out and be so bearish and freak people out, because that's really what they're doing right now. Because I've talked to a lot of people who are like, hey, you know what? This report came out from the Canadian Mortgage Housing Corporation, right? And it freaks them out because it's like it's supposed to be a big time kind of corporation, but they made a bad prediction and now they're doubling down on it. Anyone who listened to them is basically out maybe 16% of what their purchase price is. And so they could be out of what they're trying to buy, or they have to buy something smaller, right? And this is for someone who kind of needs the housing over the roof, not even like investment or anything. It's just like housing. So you have like it kind of drives me a little bit bonkers when people kind of like the Crown Corporation doesn't really give a good reasoning on what's happening. Like I get the unemployment rate is very high and the money's all not necessarily there, but the problem is, you know, they have W-shaped recoveries, U-shaped recoveries, V-shaped recoveries. Like they don't talk about this potential K-shaped recovery, right? And when I first heard it, I was like, yeah, it's a really weird looking kind of shape, right? But if you think about it, a K-shape is one goes up, one goes down. So what's happening is people who own assets that allow them to continue buying assets because they're already in the system or like in the real estate game or like own assets or own whatever it is, right? Like you own something, your value and your wealth is growing as real estate prices are going, right? Or even like Bitcoin or stocks or whatever it is you want to go with. So that part is trending upwards. And those people have made more money. Unfortunately, like for lack of a better term, the rich got richer in the pandemic, right? Like I think Bezos is like super balling now because of how well Amazon's doing, right? Whereas on the other end of the K scale, the people who are unfortunately affected by pandemic, anyone who's in the kind of say like the airline industry, hospitality, unfortunately, restaurant, right? They've been affected like crazy and they're on the downward trend, right? So it's making this wealth gap bigger and bigger. So it's people who have kind of, let's call it white collar jobs. They're able to work from home. There's a level of sense of security, right? If you're in like a good company that's growing, then you're good. You're really good. But if you're on the other end of the spectrum, you're worried about your job, your income could be diminished, it could be reduced, you could get laid off. And also maybe you don't even have a job right now and you're relying on CERB. Then when you look at these prices, like it makes no sense, right? So it's not about who's right or wrong. It's kind of, look, you have to look at the narrative from who's putting it out there right now. And that's why I'm saying, like, I don't like how CMHC is being so bearish without having like good reasoning for it, because it's very obvious when you look at what's going on that there are things that are driving the market in terms of pricing, and there's people who are taking advantage of it, right? Like you can't blame them, but the unfortunate thing is that the wealth gap is going to get bigger and bigger and bigger, and then the people without the assets are going to start hating the people who have assets. And we already kind of saw this in the last like 5 years grow more and more, right? Where tenants and landlords, there's a lot of frictions, right? Like the landlords own the assets, right? Which is on the upward trajectory of the K-shaped recovery, and then the tenants, because maybe they're not in the market, are on the other side of the K going downwards and low income. So that creates a bigger and bigger and bigger gap. And if you think about what the K-shape looks like, it goes bigger and bigger. The gap gets bigger and bigger. So you really, really have to think about where you are personally and what you're trying to do, right? The whole big thing that I'm always telling everyone, like you really got to look at what your financial situation is, whether you want to be looking at these numbers or you want to be looking at kind of the actual numbers, right? Because to be frank, no matter who is out there right now, there's nobody that would have predicted what has happened to the real estate market. Nobody, not even me. So anyone who's making a prediction, you really have to take it with a grain of salt. Hey, look, I'll circle back. When the pandemic hit, right? So we were really busy making sure our tenants and our clients' tenants were in good shape so that they don't have to kind of sell the property in a diminishing market, right? So we were focused on that. And a lot of people were just like, oh, you know what? At the time, or like at the time, they're like, oh, the market's going to crash. The market's going to crash. The market's going to crash. Nobody was said that the market was going to rebound by June and prices would come back up. Nobody. I didn't hear anybody talk about that. So again, you can't take predictions for like what they actually are. Then you look into December. Like, look, when we looked at June, I was like, okay, maybe the prices for freeholds and detaches are going to go up, right? And they definitely did. But the difficulty is that I didn't expect it to come back this much. Then when you look at condos segment, we had so much inventory. Nobody was buying condos. I was like, guys, buy a condo now. Prices will probably eventually come back maybe in like 2-3 years. It's like 10% lower than what it is, right? You can buy, you can have conditions, and look where we are now. There's no inventory for condos. Condo activity has skyrocketed like crazy. So nobody could have predicted what's happening. You really just kind of have to understand the data and information. That's kind of what I want to put out there today, right? Like, I want to show you some predictions. I want to show you some numbers. I want to show you what I'm seeing so that you can make a good judgment for yourself in kind of what's happening. So a couple of these other things that CMHC is talking about, like, you know, if we have a U-shaped recovery, meaning that we're going to stay at the bottom for a little bit, we're going to see a 33% drop in prices. And then if we have a W-shaped recovery, maybe 32%. And then they have one called W-shaped recovery with reported cyber attack. I have no idea. I'm not going to comment on that. Anyway, right? But when I look kind of at how much money is being printed out there, right? Bank of Canada is going on a buying spree, and they're buying back a lot of mortgage-backed bonds, right? So for those of you who are listening, you can't see the photo right now, but basically in 2008, we had about $100 billion of debt that we bought, right, from our own government. So that's 100 with a B. Sorry, 100 billion with a B. And now when you look at the chart in 2020, it's at almost 500 billion. It's 5x. So we have basically hockey curved our way up in less than a year. So that's why there's so much money out there. This comes in forms of interest rates being down, assets prices going up, people who are secured with their finances, like white collar jobs are still working. Their safety net has grown financially a lot more because they're still making money, and there's also benefits that help them push them out, right? So this is what I'm talking about. Like, you have to look at all the things that are happening right now. You can't just take kind of like the Crown Corporation that's saying minus 50% and then freak out, because clearly that's not the case right now. Like prices for TREB that just came out, it says prices are up 16% year over year. So last year, January, was, to 16% less than what it is right now. So if you listened to CMHC's report back in May in 2020 saying that, prices are down 18%, even if that happened, technically, because prices went up 16%, you're only down 2%. Even if it happened, right? But clearly it didn't, right? But if you didn't listen to them and you were saying, I'm going to buy something at 18%, but now it's at 16%, that's like a double swing. You're not even going to get into the market depending on what you're trying to buy, right? So this is kind of like a crazy, crazy thing that you really, really have to understand what's happening right now. Like, don't just give into a narrative that you think is true without looking at all the information. And that's what I'm seeing, right? Like, people are saying there's no way that prices can't go up, and all they come back to is like unemployment rate. Look, unemployment rate is high. It's very high right now for what it normally should be. But unfortunately, the unemployment rate, most of the people who are unemployed are the ones that are affected by COVID. And the people who are affected by COVID generally are not buying houses anyways, or assets for a matter of fact, right? So the people with money are continuing to make money, and hence the whole K-shaped recovery. And the people who are not making money because of COVID, right, it's going to trend the other way. And that's the unfortunate thing. So you really have to ask yourself, where do you stand right now in terms of financial, and what do you want to do? So like for me, I'm just trying to protect kind of the money we've made and that we worked hard for, right? Because when money is being printed, things get devalued. So if I have like $100 sitting in the bank, the more and more money that comes up, inflation happens, like the less and less things I can buy with that $100, right? Like I think I talked about this a lot of times, where like I've been to the grocery store, things that I'm buying right now. It's not, I don't even think it's like the inflation. I just think it's like the COVID supply chain that's messed it up. Like certain things I buy have doubled and tripled in price. It's just crazy, right? Like there is this happening right now, and you really, really got to dig deep into what the heck is going on, right? Before you actually take it verbatim of what's happening. So for any of you who are out there, and this is not to sound self-serving and for that you buy something, but like, look, just really look at it. If you only believed the Crown Corporation of CMHC saying that prices are going to be down 50%, but if it doesn't, where are you going to be? right? Like there's a whole bunch of people. I remember when I started real estate, right? They were like, oh, it's going to crash in 2008, right? And all the prices are going to come plummeting it down just like US. We didn't get affected by it. But if you didn't buy something in, say, like 10 years ago, look at what prices are now, right? So in front of me, I have a screen. It's courtesy of homing.ca. I think I found it somewhere online. But it's just comparing what a price is 10 years ago in 2011 to what a price is right now, right? So obviously these numbers are not the latest Trev numbers, but this was probably for December numbers. So in 2011, you could buy a detached for $450,000 in Toronto. GTA, they have a GTA right now. Right now, it's $1.24 million. That's more than doubled in 10 years, right? And then you have semis. It went from 360 in 10 years to 830. Then you got townhomes. It went from 355 to 768. Your condo has gone from 285,000 to 600,000. Just think about that. Prices have basically doubled, some almost tripled in 10 years. And now when we look at that little curve again, when we see in 2011, there was some money being printed. We maybe were at 100 billion with a B. Now we're at almost 500 billion with a B. Where do you think prices are going to be in the next 10 years? Right? Are you going to listen to CMHC's report, or are you going to listen to some of the actual data, right? It's completely up to you, right? And what you want to kind of believe. There's nothing I can tell you any more other than that, right? It's not to sound like you need to buy something. It's just think about what's happening to your money right now. A lot of people don't understand the bigger picture, right? And they only focus on the smaller thing and saying how it's unfair. I don't think things are right. It's almost kind of like anyone who's bought a house 10 years ago, like, for $500,000, you could buy a house. Now you can barely buy a condo. And then when you're trying to buy something for your kids, right? You're like, oh my God, 10 years ago, I could buy a house for this. There's no way I'm going to pay $500,000 for this little box in the sky. You have to understand what's happening to money, right? Like as a whole economical thing. So without kind of battering on any more longer about kind of what's happening, I want to show you some numbers from Treb on kind of what's happening. So for anyone who's who's not COVID, just I need to drink some water, 1 sec. So for anyone who is listening, I have like my ginormous nerdy spreadsheet up, but the numbers that came out for Treb are basically this, okay? At the end of January 2020, the average price is $967,000. This is the second highest number, I think only to October 2020. Now, I haven't gone like a full deep dive onto what the numbers are going to be like, so make sure you smash the like button and subscribe to the Prime Property channel. I'm going to do like a bigger deep dive on the market watch numbers and what's happening on Thursday. So just a really quick glance, right? Because I just inputted these numbers into my spreadsheet to kind of give me a little bit of a feel for the situation. In January, $967,000. It's only like $1,000 less than the peak of last year in October 20, which is absolutely crazy. The crazy thing is the months of inventory is now at 1.06. So basically, if no properties came out for 1 month, we would have no houses to buy. And when you have low inventory, that's when prices go up, right? I talk about this all the time, right? And these detaches with more space during the pandemic are becoming hotter and hotter. So you can see that like right now in the 416 detached, like the average price now is back up to 1.581, which I think is the highest. We've been past 1.5 a little bit, but now we're almost at 1.6. That's definitely a record. It means it went up 7% over the course of a month from December to January. And I say this all the time. No one ever listens, with the exception of a few. Right, I'm going to show you on the screen now. When we look at only January numbers, January always never has any inventory, right? But when we look at the months of inventory change, you can see that sometimes the prices go up, sometimes it goes down. Most of the time it goes up, right? So when we compare ourselves to what happened in 2017, because everyone's kind of freaking about like what's happening right now, the prices went up 5% in January, at the end of January, right? In 2017, which was a craziness. We went up 3.83%. From December. And this is what I've been always saying. If you actually look at what causes all the prices jump into spring, when you look at February, every single year prices go up at the end of February. So in 2017, the prices went up 14.06%. That's absolutely bonkers. We're looking at 6% like year over year increase on average, right? But when you go from January to February in 2017, it went 14%. And I've always been saying, like right now, it feels like 2017, 2016 time, but just not as crazy, right? But still fairly crazy. And I was saying like it's somewhere between like 60, 70% there, right? And this number keeps increasing like every single week right now. So when we kind of look at what happened in 2020, the prices went up 8.45% before pandemic. And if prices went up 14% in 2017, if we're like maybe half of that, that's 7%. If we're at 75% of that, can't do math right now, that's like 9%, right? So what's it going to look like in a month's time in terms of pricing? And I'm not telling you this to give you FOMO as to what's happening, right? Like you really have to think about what you're going to do with whatever it is you're buying, right? So like if you're buying something that makes sense and you're living in it and you can support the payments and you're in a pretty cushy job right now where you don't think you're going to be affected by pandemic, yeah, go ahead because interest rates are low like crazy. But if you're kind of like a speculator and you have FOMO and you want to buy something before it's too late, maybe dial it back a little bit, right? Watch out. So the other thing that kind of when I plugged the numbers and kind of gave me like what the bleep moment, right? So we all know the 905 area is super hot, right? Especially like Durham right now, it's like balls to the walls, like crazy hot. So right now, when I punched in the numbers, looking at a month-to-month kind of increase in price, the detached in the 905 area is at a stupid $1.3 million average price. $1.3 million. We never even touched 1.2. We didn't even touch 1.2. We skipped from 1.175 last month to 1.3. It's up 11.28% right now. The months of inventory is less than one, meaning there's more sales than there are listings right now. That means everything is selling regardless of condition and what it looks like. It's absolutely bonkers, like just absolutely bonkers. So when you're telling me, CMHC, that prices are going to be down 13% in 10 years, I've made it back in 1 month on the 905 detached. And the reason why I want to give you some context into this is we always talk about average price, right? So in this chart, I'm going to highlight average price right here, which is $967,000. When you look at each segment of the market and maybe each neighborhood and region, it's going to be absolutely different. But one of the things I noticed when I was just right off the bat, the amount of condos that have actually sold last month was actually surprisingly high. So you can see in here, we have 1,700 plus another 700 in, 1,700 in like 416 condos and another 700 in 905 condos. So that tells me 2,400 the sales that happened in January, which is a third of all the sales. Sorry, not, yeah, a little bit more than a third. Let's call it like, I can't do math. Sorry, 40% right now. Yeah, about 40%, right? Because 24. Yeah, okay. So about 40% of the sales are attributed to condos. That's rare. So when we look at the condos, you know how I was saying earlier, like I was telling everyone, like, look, you should buy a condo right now. Maybe prices will recover in 2-3 years. I'm not saying I own a crystal ball. I didn't even see this coming. Look at the months of inventory now. It's at 1.39. 1.39. This is where we were, basically a little bit shy of that less than 1 month inventory, but back in before the pandemic when things were like bonkers high, where the average price was $722,000. So right now we're looking at this, we're still like hovering 624,000. And when I look for condos for some of my clients who are trying to get into this right now, because now they're finally seeing this, everything is sold conditionally. It means that certain sellers haven't adjusted to what the market is yet right now. But what did happen is that those who understood, they're like, okay, I should buy something, tie it up conditionally, and then figure it out a little bit afterwards. Because the more I'm going through kind of like buying some places for my clients right now, the more I'm seeing multiple offers hold back, right? So the other day, I think it was Friday, I was with a client trying to buy a 2-bedroom condo at Wellesley. So this is 50 Wellesley. I'm just going to pull this up for everyone that's looking. It was a 2-bedroom. I think it was 710 square feet. It's a new building, not under rent control. It was listed at $799, right? And the last comp, which was 3 floors below, basically the exact same layout, parking, locker, it was sold for, I think, $871,000, right? So there's 5 offers on Friday, and they moved it up. And I just found that it sold for $1.3 million. So 3 floors up, 1 month ago, it sold for $871,000. In span of a month, prices went up $150,000. Just think about that. That's a very extreme case, not to freak you out, right? But only 5 offers. Only 5 offers. Now, could that be kind of like an off one? Maybe. But this person was just holding offers and only 5 offers came up. So it tells you what kind of demand is there right now, right? So when we go back to looking at these numbers, the prices are still relatively low compared to where they are. And the inventory is now slowly coming down. So if we are reducing our inventory, what is going to happen to prices? If you are thinking they went up, yes, correct. You got it, right? So there is an inventory issue and prices are going to go up. So when we're looking at a lot of these places that are sold conditionally right now and everyone's kind of holding offers, what do you think is going to happen in February when I even just said like all the prices always increase a significant amount in February? It didn't increase for condos from December to January, but I'm pretty sure it's going to happen in February. And then there's this whole kind of like other issue that we haven't talked about where remember in March 2020 when everything went to poo-poo? I'm highlighting it right now, but like inventory went up like crazy. Prices went down like crazy. So sorry, not March, April, right? So when we had a full month of the pandemic, everything went down. What are the numbers going to look like year over year when we compare a crazy hot market in April to what is going to be a really crappy market because of the pandemic? The media headlines are going to blow up. I've been saying this for 2 months. Just watch out. That's when I thought condos would start picking up and getting some traction, but it's already getting traction. I have no idea where it's going to go. Like there's this like a joke that our team keeps having right now. Like we're looking at some things and we're like, yeah, I'll probably sell for this much, but you know what? Let's put in a 5 or 10% buffer for what we think it's going to sell for because someone crazy is going to blow us out of the water because there's no inventory, right? And it's been happening over and over and over again. Right. So I was looking at some of the data we had for like how we bought some how we bought some of our clients' properties in the last month. Right. So of the 7, 4 were won from bully offers. Like we saw it. They were accepting bully offers. Boom. In, buy it. No one else was looking. Right. Or no one else had a chance. Right. We just went in, gave them what the sellers want and boom. Then we had another 2, which we actually won in multiple offer situation just because they weren't they weren't looking at bully offers or preemptive offers, whatever you want to call it, the technical term. So we won 2 of those, but we had to obviously be an unconditional and a lot of a really high price, right? And then the other 2, which were actually condos, and we just went in there. They didn't know what was going on. They weren't holding offers, and we just tied it up, right? So you really have to look at the landscape of things. And obviously, you know, the ones we had to bully, they were all like freehold homes in an 905 area. And the ones we didn't have to have any multiple offers, we just caught some people who didn't understand what was happening with the market. And we just locked it in with the price and we just gave them what they want because we knew where the market was going to head. And that's kind of like some investors are understanding that and some people aren't. And you just got to make a quick decision really fast, right? So in all of those situations, like we actually wanted something like outside of the bully offers, we saw anywhere between like 5 to like 15 offers, depending on what the property is, right? 5 on the lower end, which is closer to like condos. And then on the higher end, like, 15 with some of the freehold properties in the 905 area. So it's not to kind of like say it's absolutely crazy out there. Like it kind of is, but like, it's not, there's still, a lot of buyers looking for the same amount of inventory, but it's not like the whole, 30, 50, 70 offers. Like those, I think are now slowly starting to like slow down a little bit and people aren't kind of like, crazy and like just talking about it. Like it obviously still happens. Like there's a couple that I know of that happened last week, but it's no longer kind of, the main attraction or the main thing that people are talking about, right? So don't worry about that, but just do understand that prices are going up right now because inventory is low, right? The overall month of inventory is low. And if I were really to kind of look at, take out the condo numbers versus the detached numbers, because condos made up like 40% of the sales, I bet you anything, the average price is actually over $1 million if we had the proper proportion of sales normally. So like normally it's like 30, 25% condos and the rest are like freehold properties. Right now we're like 60-40, where like 40 is condo, 60 is freehold. And the reason I'm saying this is because freehold properties are higher in average price right now, right? Like I was talking last week's video, like talking about the gap. That gap is huge now. I bet that gap is bigger than it ever was in 2017, just how quickly things are moving. So if I were to balance the actual proper proportions of how many like condos sold and freeholds sold, I bet you we were at $1 million in average price. The only reason it's this low is because we had a surprising amount of condo sales. Because like, this is how math works, right? Like if say we only had 4,000 sales, which is kind of what we did, I think, in January last year, right? 4,500. If we did 75% of those were like freeholds like they normally were, then I bet you anything we're at $1 million in average price. This is how fast it's moving, right? Like you can just look at the detached 905 I was telling you about, right? Like it skipped 1.2 million, it just went from 1.1 to like 1.3. It's absolutely bonkers out there right now. So you really, really have to, again, just know what is going on. Like if you're sitting on money and you've been always trying to buy something to live in, just go buy it now, right? Like whether you want to use us or not, obviously I think you should use us because we know what we're talking about. But if you don't want to use us, like just go buy something right now. Like stop trying to time this market. I would honestly stop listening to the CMHC market right now just because I don't think it makes any sense for someone to be this bearish, right? Like even if they are right, okay, let's just say they're right. If prices come back down that amount, it's already gone back up this much, right? So you call it a break even, right? But if they're wrong, then you could potentially out of the real estate ladder in Toronto forever, the way things are moving, right? If we've doubled in prices, like average price in the last 10 years with like, let's call it 25% of the current money printing, right? I'm taking this number from 20%, right? It's 500 billion now and 100 billion before. If we're now at 5x the amount of money printing, what's going to happen to prices in the next 10 years? What is it? Like really ask yourself that question, right? So if you're able to just hold a property for 3-5 years, you're going to be okay, right? Like you're going to be okay. But if you're always looking at what the prices are, even though it's gone up or gone down, and that's all you're focusing on, even though you don't realize any losses or gains, then it's going to freak you out, right? So that's why I say, like, you have to know what your plan is, what the goal is you're trying to do, and figure out financially if it makes sense for you. And just don't take one headline. Even don't even take what I'm telling you right now verbatim, right? Like just really try to understand from your perspective what's going on, right? And how this all applies to you. Because this whole money printing thing, it's a game that has been forced on us by the central banks, right? There's nothing we can do about it. You either play the game or you're not going to win at all, right? And that's unfortunately what's going to happen. So I'm really, really just kind of trying to give you an idea of what we can see in the future or what's to happen. I don't know. There's no way to predict it. Like I was fairly bullish on what was going to happen, and then like prices still shot up like way faster than I thought, right? Like I'm really hoping that we're going to have a huge surge of inventory come March, because like, let's face it, no one really wants to sell their place in January most of the time anyways. That's where you've always have inventory problem. And then when you kind of mix in the pandemic, kind of like I was saying before, if you are like living in the house and you're trying to sell it, I don't know if I want people coming in, right? So maybe I'll wait until the lockdown is over, which I don't know. I think Ford's supposed to say something about today. And then if you have it tenanted, yeah, sure, you don't live there, but maybe the tenant's going to push back on people showing, right? So we see a lot of that as well. And then the only time may make sense if it's vacant, right? So that combination of things of like low inventory normally in January plus the pandemic plus the lockdown really makes it difficult for anyone to really want to sell a property, right? So it's really driving down the inventory number. So I'm fingers crossing that come March, there's going to be more inventory. Maybe there'll be a little bit of buyer fatigue. And what buyer fatigue is basically like people going in trying to buy stuff and they're just not winning in these multiple offers and like forget how to give them, like, toss up their hands up. I'm just gonna wait later, right? So there is going to be some buyer fatigue eventually. I've seen this enough, right? Like it depends on who the person is, like how strong they are in terms of what they want to buy. But sometimes it affects the buyers who are trying to buy something, and if you keep missing out on it, sometimes like you just want to believe in a different narrative and you just stop. And there's nothing wrong with that, right? But it's just it may take some buyers out of the buyer pool. But what I'm saying is I don't think the buyers are there just yet, right? Like the majority of them. I think the people who are still looking to buy a place are still trying to buy a place, because anyone who's looking at the freehold market right now that wants more space because pandemic, and then they're still looking because they're trying to exit where they are right now. And again, this all circles back to the people who are buying right now are not the ones who have been affected financially by the pandemic, right? So take into consideration this very bearish CMHC side, prices dropping 50%, and also take into the fact of what the numbers are from what I just showed you, right? Because it's really, really hard to kind of predict what's happening, right? Like I could be very bearish and talk about, CMHC numbers and how things are going to go to poo-poo in like 10 years. But I can also be super aggressive with like bullish and say prices went up. And I kind of was, right? But when you kind of mix the two, just understand what's kind of going on in terms of like that dynamics, right? And if you can understand that and apply it to kind of where you want to be financial, or like what you have saved up financially, then yeah, you can make a move, right? And if you're not really sure whether you should be buying something or selling something right now, yeah, well, I'll put a link on the screen right now. It's www.chavs, you can set up a call and we can figure out what works for you, right? Because again, everyone's situation is different. Now, I'm going to go back to talking a little bit about money printing. And as you guys all know, you probably know, like most of my client base is like investors and buyers, right? So very rarely do we have listings. I would say like 80-20, not even like 85-15, right? And I always come back to this question, like when you are when you think the market is hot right now, right? And this is for all you sellers out there, right? Why are you selling an asset that is going up in price? Is it because you think it's going to crash, right? Are you believing the CMHC numbers, right? So really ask who's on the other side telling you to sell. And let's be real, 99% of the time, it's realtors that want you to sell the property so they have a listing and they make money. But I always tell my clients who are investors, like when there's so much money out there, let's say you walk out with, call it $200,000, and you don't have to pay capital gains tax, so whatever, 200 grand. What are you putting it into? Right? What are you putting it into? If the plan is to kind of buy 2 other properties, yeah, go for it. Makes total sense, right? This is my whole monopoly analogy. Like if you don't sell the little green homes until you upgrade to Red Hotel, or if you're selling 1 green home to get 2 hotel, go for it, right? Makes total sense. But if you're not putting the money into something, it's going to get devalued, which is what we're talking about, right? Like anyone that has money right now sitting on the better side of the K-shaped recovery, they're going to keep putting it back into market. And it's not sometimes even to have the value of that money go up. Sometimes it's just like a store of value because we don't believe the Canadian dollar is going to like retain its value, right? Because inflation is running away. So whether you just put into S&P 500 because you think it's going to go with the market and you're safe from inflation, or maybe put into Bitcoin because you think the current fiat system is going to go to crap, or you put into real estate because it produces income, right? You really have to think what you're going to do with it. Because I have some clients who right now on the fence, right? Like, maybe they're buying their first investment properties and they see how quickly these prices are going up for investment properties, right? Like, look, it's not just to GTA, it's all over Southern Ontario, and I would say most of Canada as well when I look at the Korea stats from 2 weeks ago, right? So if you're able to put your money into something that produces income, specifically if it's like a cash flow positive property where, it's generating you income after debt servicing, right? So, I'm going to be making a video about this a little bit later for anyone who wants to understand like how to calculate cash flow. So make sure you like and subscribe, right? But if you're creating income with an asset like real estate, why are you selling it? Like even if you buy for like $800,000, $900,000, it's producing income for you, right? Like let's just call it a forced savings account, and it also pays you back a high interest. It's the same thing as buying like a dividend paying stock, right? It forces you to put your money away and then it spits out a little bit of money on a percentage of the return, right? So why would you ever sell it? Like I have a few clients who we bought some investment properties in Oshawa and Hamilton, right? And I'm leasing it for them right now because we are closing on them, or like we did some renovations and they're ready. Like I'm looking at all the applicants right now that are looking, and I would say 10 to 20% of them, they tell me, hey, I'm looking to rent because I sold my house. I'm like, why? Why would you, right? Like, who's on the other side telling you to sell it, right? Like, if you sold your house because the market's hot and now you're going to go rent, what are you doing with your money? What are you doing with your money, right? Like, it just doesn't make sense. But here's the crazy thing, right? Like, not everyone understands this whole dynamic of what's going on because all they're doing is reading headlines. Unfortunately, like I'm a millennial, right? On the older side of the millennials, but like it's so much like headline grabbing stuff where you really have to dig deep, right? And this is my purpose of having this podcast, right? Of having the bearish prediction from CMHC and also the actual stats and the numbers that say what's happening, right? So if you have money there and you're not putting into something that's at least storing its value, what are you doing with it when you sold the place? Like these properties, I'm putting them on, like some are on MLS, some are on private. Like on ones on MLS, I'm getting offers right away and I'm pushing the boundaries on the rental market, right? So I'll give you an idea. I have a property in Whitby, downtown Whitby. We just renovated, put some money in it, kind of pot lights throughout. Really, really nice looking. When we bought it first, it was in October. And we we bought in November and we closed in end of December, I think. And yeah, we went to bullion, and I put the rents. I'm like, oh, you know what? You're still going to cash flow. I think we're going to do about 21 to maybe like 1,500 at the bottom. So like 3,600 in gross rent. I put it up for 23 and 17. I have 50 requests for showing for the basement at 1,700. And I have like, I think 20 something for upstairs. I have 2 offers in my inbox right now from other agents I haven't even looked at yet because I haven't had time. And this is how nuts it is. It's 23 and 17 now. I increased the rent from my prediction from 2 months ago by $400 or $500, right? And that means the cash flow has increased by another $400 to $500. Think about that. You don't sell these assets that are producing income, especially if they're cash flow positive. You continue buying them because they generate income, especially real estate that's self-liquidating, right? That's my whole purpose. Like the other one, I have one in Hamilton Mountains right now, 4-bedroom, 2 washrooms. We bought it actually like in the 800s, and it was done up quite well. And we have 4 bedrooms, 2 washrooms. Yeah, okay, yeah. So I was like, okay, you know what? Conservatively, let's say, it goes for 2,100, right? Because we leased out some 3 bedrooms, 1 washroom for 2,000. Let's say maybe it's 21, 22 to be conservative. I have it at 23 right now, and I also have like 40 people lined up to see the property. We have not closed on the property yet. I just want to gauge kind of the interest level. And then the basement is for 1,700. We have a ton of people requesting it. And when I'm looking at kind of who's requesting, it's a lot of people coming in. Maybe they're moving for space, right? They have pets now because getting a pet in the pandemic has been a thing, us included. But we got Coco technically before the pandemic. Anyways, so the whole point where I'm trying to get at is like people are looking for space. They're trying to move out of Toronto right now because the rental market in Toronto is still pretty low. But there's so much demand that the prices of rent have gone up that even if the price of your investment property has gone up, the rents have gone up and have caught on. So we've been trying to figure out the numbers to be about like somewhere $700 to $900 in cash flow on these like 2-unit properties. And despite us buying it at another like $100,000 more expensive, the rents have actually gone up more where the cash flow has increased more than what we originally anticipated like 2 to 3 months ago. So, when there's so much money out there and you're kind of freaking out about what the prices are, I am too, right? I really am too, because I don't like seeing prices go up 16, 17%. It makes no sense. It's not sustainable. It's not going to be like this. The ride is going to end somewhere. I'm telling you now, it is going to end at some point, whether it's from a lot of inventory coming, but it's not going to end in a sense where it's going to come crashing down. Maybe you'll see a little dip, maybe a correction, kind of like what we saw with the condos during the pandemic, right? You just can't forecast any of this, right? Back to my CMHC versus TREP numbers. Right? There's no way you can predict it, but what you need to do is figure out what you're going to do financially to protect your assets and the money you worked very hard to earn. And then if it produces income and the numbers still work, so even like with these higher like $800,000 investment properties we're buying, the numbers still work. Just buy it, hold on to it. Your money's gonna be safe. It's generating income. It makes complete sense, right? You really, really, really have to understand that. And just a couple more kind of things I want to tell you guys what's going on. Like if you are on the selling side, right? Make sure whoever it is that you're buying, we saw this in 2017, you're good with kind of what it sells for because the price is going to be pushed right now. And you want to make sure the kind of buyer is maybe using more than just 20% down, just an FYI, putting it out there because we have some listings coming up and this is what I'm going to watch for because you don't want a situation where the appraisals don't come back well enough and then the sellers, the buyers have to bridge the difference, right? So like if, you bought something for $500,000 and it comes back at $450,000 from the bank, then the seller who only has 20% for $500,000 doesn't have the money to cover the difference of $500,000 minus $450,000, which is $50,000. So that means they are only going to they have to add on another $50,000 on their purchase price, which may not have, right? So be very careful of who your buyer is. I would really urge everybody out there, I would ask the question because you really, really have to watch out because although prices are increasing and we haven't had issues with appraisals with our mortgage broker, you have to kind of just be somewhat cautious because sometimes it takes a little bit of time for the market and the appraisers to understand the market's going up, right? So, sometimes with investment property, we look at how the rental incomes are and it's a little different, right? Depending on which bank. But if you're buying for end use, you really just got to watch out for what the other comps nearby. Like you don't really, if there's a very close by house that the appraiser is going to use that, clearly sold for like $1 million at the height of the market and now you're buying 1.1, just be ready, right? So just watch out for those things. And then in terms of kind of like the showings out there, the showings, I think I talked about last time, like not many people are double booking, but there's still a lot of showings going on despite kind of like, the lockdown. So it tells me that there's still a lot of people looking at properties, either rentals or even to buy, right? So there is, I hate using this word, but there is like pent up demand on both the buying side and the rental side, right? So you really kind of can capitalize on that right now or see where the market is and you kind of not try to time it, but like just understand what's happening so that what kind of move you're going to make, right? Because if the rental side is low right now, like it's okay to even maybe push the rent a little bit more, right? Like, yes, you're not going to maybe get as many people who want to look at the property, but at the same time, if you push the rent, you get more income, but at the same time, you get probably higher quality tenants because they probably have to make more money to sustain the higher asking price of the rent, right? So same thing with the buying side, right? Like, if you're going to push the rents and you maybe do some renovations and a lot of people like it, it's probably going to work, right? Because there's so low inventory right now, but you need to watch out for who the buyers are, right? So again, as a whole right now, the market's moving really quickly. And I'm kind of I think I'm running out of things to say right now. I think I have a list over here, but like basically, like I wrapped up the list, but basically like I want to summarize it all up for you. Don't only look at one person's headlines for what's happening in the market. So don't only focus on CMHC because you need to understand what's actually happening with the data, right? Because CMHC and TREB is totally different. Like the predictions that are coming up make no sense. And you just have to understand what's happening and look really diligently and understand what exactly is happening. Because if you don't and you make the wrong move, obviously it's going to suck. Whether you buy or don't buy, it's going to suck depending on how the market goes, right? So you just got to understand your situation and really, really understand, I would say economically, what's happening with all this money printing stuff, what the demand side is, what the inventory side is. And those are the key things when you loop them together, why I think the market is going to kind of continue to increase in price. Just because, I haven't even talked about immigration and all that stuff yet, right? But like, the people who are buying properties are not affected by the unemployment rate right now. The people who are renting right now may be, but there's still so much money being sent out by like EI right now that a lot of people still have money to pay that increased type of rent. And there's still, like I was saying, a lot of people who sold their places and they have like a few $100,000 that also want to continue renting. So there's a lot of tenant buyer pools there. So understanding all these dynamics before you make a decision on like buying real estate or selling real estate is very important. And I would almost say if you are trying to sell something to kind of time the market, it's fine, but just make sure you do something with the money afterwards, because if you really don't, like, it could potentially set you back financially, because like you may think this is the frothiest of the real estate market right now, right? And Bank of Canada's not acknowledging it, but I don't think we're at the top. We're not at the peak yet. Just looking at all the numbers and the way that we're increasing, I think there's still more room to grow. The money printing out there, it's insane. All the builders are being aggressive. All the prices are coming up. They're all increasing. The inventory is still low. It's going to continue this way. And the only way I think it's going to stop in the near future is that there's buyer fatigue and a lot of inventory comes out. But from basically now, which is February 8th, until maybe like say March break, when hopefully things kind of go back to normal, I don't see the inventory increasing anytime soon. And like I said earlier in this video, prices going from January to February, they always increase. The lowest percent increase we saw was 7%. 2017 was 14%. If we're like 3/4 of the way, are we going to see a 10% jump from January to February? There's a chance. There really is a chance. So take all of this into consideration of what's going to happen. If you are trying to make a move in the real estate market and all of this kind of makes sense to you, but at the same time, none of it makes sense, and you're like, Zed, I don't know what's going on. Again, link in the description. Link on the screen right now, chaozen.com. You can book a call with me, and we can figure out what kind of works for you. But as a whole, right now, there's just one kind of interesting joke I want to leave you guys with, right? I just have to squeeze it in because it was Super Bowl yesterday. Never bet against Tom Brady or the Toronto real estate market. You're gonna lose. Brady won last night, and I think the Toronto market still got some room to grow, right? Again, that's just a joke. Don't take it too seriously. But keep in mind of all the things I said, like in the first 40 minutes of this video. Make sure you know what you're doing and actually have a solid plan, because real estate, especially right now, is not a short-term kind of a decision. Make sure you think about what exactly you're going to do, what you're going to do with the asset, or you're going to live there and whatever. And if you don't understand, again, you can give me a call, book a call with me. The link will be on the screen. So hopefully this helps. I know it's a little bit longer, but I really kind of saved a lot of what last month's episode of the podcast was for this month, because I wanted to have all this data in front of me to kind of talk about it, right? So again, if you're not subscribed to the PPTO channel, make sure you do that. I'm going to go into a deep dive onto what's actually happening with the market when I had some time, maybe tomorrow or the day after. That'll be coming on Thursday. And then I may be changing up some of the content, maybe for this podcast to talk more about the numbers, a little bit long form, and I'll be adding different types of content in this year as well. Trying to do a little bit more of that to provide more information for you guys out there. Okay, so hopefully you guys enjoyed this longer podcast. Sorry, maybe it's a little bit too long, but there was a lot of information that I hope you can take away from it. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.